Take a contractor I will call Marcus. He had done everything a good freelancer is supposed to do. 41 years old, a software developer in Leeds, 3 years out on his own after leaving a corporate job he had outgrown. He kept every receipt. He filed on time, every single time. And when a 30-second video told him he could claim 40% of his household bills as a home office expense, he did exactly that. Gas, electric, water, broadband, 40%. Straight into the box on his tax return. It felt clever. It felt like the system finally working in his favor. 11 months later, a brown envelope from HMRC landed on his doormat. And Marcus learned the difference between a deduction and a liability the hard way. Here is what nobody tells you. In the last tax year alone, HMRC's data systems helped claw back £4.6 billion in additional tax. A record. And plenty of those inquiries are not catching criminals hiding millions offshore. They are catching ordinary, honest people like Marcus. People who simply followed bad advice from someone who has never seen the inside of a tax tribunal. The frustrating part is this. There is a completely legal way to claim your home office that HMRC will never question. And most people ignore it because a louder voice online told them to chase a bigger number. Today, I am going to show you exactly where the line sits between the claim that is safe and the claim that gets you flagged. The precise formula HMRC actually accepts, and the 3-step protocol that makes your claim bulletproof. Every week, I break down what accountants charge hundreds of pounds an hour to explain for free. So if that is useful, the subscribe button is right there. Let us start with something most people do not realize. HMRC actually wants you to claim your home office. If you run any part of your business from home, the admin, the invoicing, the late night quoting, a share of your household costs is a legitimate business expense. The only question is how you claim it. And here, HMRC gives you 2 completely different routes. Route 1 is the simplified flat rate. HMRC sets a fixed monthly amount based on how many hours you work from home. For sole traders, it is £10 a month for 25 to 50 hours, £18 for 51 to 100 hours, and £26 a month once you pass 101 hours. Company directors have their own version, £6 a week, £312 a year. And here is the crucial part. This route needs no receipts, no bills, no floor plans, nothing. It is effectively tribunal proof because HMRC published the number themselves. Route 2 is the actual costs method. Here you claim a genuine proportion of your real bills. Heating, electricity, council tax, rent, broadband. This can produce a bigger deduction. But it comes with one condition. You have to be able to show you're working. And that condition is exactly where Marcus went wrong. He took Route 2, but he skipped the working entirely. To understand why that is so dangerous now, you need to understand what is sitting on the other side of your tax return. It is a system called Connect. HMRC introduced it back in 2010, and it has grown every year since into one of the largest data systems in government. It cross-references your return against more than 30 sources. Banks, land registry, the DVLA, council tax bands, overseas tax authorities, payment platforms like PayPal and Stripe. It does not read your mind, and it does not automatically launch an investigation. A human officer still makes that call. What it does is build a picture of what your return should look like, compare it to what you filed, and score the gap. So here is the trap, and I want to be precise about it. The problem is not the flat rate. The flat rate is safe. The problem is claiming a large, round, arbitrary percentage of your actual bills and calling it an estimate. Think about what 40% of my household bills really means. Marcus's total annual bills came to around £8,000. 40% of that is £3,200. Now compare that to what a proper calculation of a normal home actually produces. For most people working from a spare room, the honest figure is a few £100s, not a few thousand. So when Marcus put £3,200 in that box, he was not claiming a bit too much. He was claiming a number roughly 10 times what a genuine calculation would give. To Connect, that does not look like a home office. It looks like a red flag with a postcode attached. And the moment HMRC asks the only question that matters, show us how you arrived at that number, you have nothing to hand them. So what does a defensible claim actually look like? HMRC accepts an apportionment based on two things: space and time. Your